Guys, this is S&P 500 Technical Analysis for the week of February 13th, 2023. So guys, now we are going to discuss the agenda of this S&P 500 Technical Analysis. So guys, the first point of the agenda is the tip of the week. So in this tip of the week, I will leave it to your judgment, okay, because some say that it's a manipulation technique. Some say that no, it's a technical glitch, okay. Now, what happens is that you know that each and every second, not just second, but milliseconds are very, very important and very, very crucial in the stock market because hundreds of millions of dollars are traded in the stock market every second, right? So what happens is that CNBC. Okay, we all know that this is the CNBC, okay, and we all trust the CNBC and we all rely on the information that is published on CNBC. Okay, so what happens is that whenever some event happens, like the press conference of the Federal Reserve Chairman, right? So what happens is that particularly, okay, this is what I've noticed, okay, in case of this the CNBC. So what you will see that the press conference, okay, it is delayed. So there is a delay. There is a delay. Delay of what? There is a delay in the broadcast of that the press conference of the Fed chairman, and that delay is somewhere from 40 seconds to 60 seconds. Okay. Now remember, each and every second is very, very crucial in the stock market, and hundreds of millions of dollars are traded every second, right? Means the information that you were supposed to get 40 seconds earlier in time, you are getting the same information after 40 seconds or after 60 seconds. What happens is that you will notice that now there are sudden movements. Suddenly, okay, there is an upward movement. Suddenly, there is this the downward movement, and you won't be able to understand that why it is happening. So the information that you were supposed to get in time, you are getting the information after 40 to 60 seconds. And this 40 to 60 seconds is more than enough time for the market mover, for the market manipulators, the big players to play the game. And they will give the sudden spikes, okay, sudden upward movement, sudden downward movement, and you won't be able to understand that why it is happening. And when you look into this the live telecast, then you will see that the Fed chairman has said nothing like that. But then after 40 seconds, then you will see, okay, yes, he has said something like this. Okay, so this is all about delaying the information. So this is what I have observed, and I hope that many of you might have observed this the same thing. So if you are watching the live telecast on the CNBC, okay, and at the same time, if you choose any other channel, there are multiple channels, then you will notice that there is a 40 to 60 seconds delay. Now I'm not going to say that it is manipulation or what, okay, I leave it to your judgment. Okay, so what I advise you through this, the first point of the agenda is that whenever there comes such a crucial event that, for example, Fed chairman is going to speak, okay, or president is going to speak, okay, on the economic matter, etc., then if you are watching the CNBC, then at the same time you should also tune into some other channels just to make sure that you are getting the information in time. Remember guys, stock market is all about the information. It is all about the information. If there comes even a 1 second delay, then a lot can change, a lot can happen in the stock market. And here we are talking about 40 to 60 seconds of delay. Then guys, then comes this the second point of the agenda, and this is the S&P 500 technical analysis on the weekly chart. So as usual, I will talk about the long-term picture, the big picture. Big picture comes through the weekly chart. So we will see that how S&P 500 has saved itself. If the S&P 500 would have closed below 4078, then definitely 99% this was the beginning of the resumption of the long-term bear trend in the entire stock market. And this was the same thing that I mentioned in my final update to my YouTube community members, that closing of the S&P 500 below 4078 through the weekly chart says that now it's almost 99% clear and confirmed that the long or the short-term bullish trend or any such bullish possibility is over. It's gone, and that the market, the stock market, and the S&P 500 will now resume its long-term bearish trend. So this was a critical point. Okay, so this is what we are going to see and we are going to discuss in this the weekly chart of the S&P 500. Okay, and once again guys, weekly chart means the hawk eye view, the long term trend, 2 weeks, 1 month, 2 months. We are going to see that what is going to happen. Okay, now S&P 500 is at the critical phase. Critical phase means it can resume its bearish trend, okay, or it can still show signs that it is trying to hold. So this is what we are going to see through this, the weekly chart, right? Now comes the next point, the third point of the agenda of this S&P 500 technical analysis. And the third point is the recent comments of the Federal Reserve Chairman. So we will talk about the recent comments of the Fed Chairman and how his tone has changed. So last week he was positive. His tone was positive, even though the numbers were negative, that I've discussed already. The numbers, whatever he has presented, the data, the numbers, the projection, everything was bearish. But his tone was positive, and that led this is the upward movement. This is the upward movement. Surprisingly, the upward movement in the entire stock market, right? But what happened is that within a week, just within a week, okay, because of the because of much better than expected non-farm payrolls data, his tone has changed. So this was the information that I've given to my YouTube community members on that day in the second update. And I told them that now no need to go positive, no need to go bullish. Bullish trend is over. Any upward movement, any bullish trend is most likely, okay, it will be a bullish trap. And you can see it was a bullish trap, then down and down. Okay, so we knew that because his tone has changed, okay, and the numbers that he has presented, and now he's not that much happy. This means that any bullish movement, okay, it is not going to be there in the picture. Other than that, because there was a technical failure through 4185, so it means the bullish trend, it is done. It is done. Now we are going bearish. Simple. Okay, so this was there, and the YouTube community members, they have made money, okay, on these days 1, 2, and 3. Okay, anyways. Then comes the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point is the S&P 500 support and resistance levels. Okay, so guys, if you remember, okay, last week I told you that 4185, there was a rejection, there was a failure. And other than that, there was a bearish dozy last Friday. Okay, that was February 3rd. So on Monday, a downward movement, it was there in the picture, and I told you that our retest of 4,100, 4,110. Okay, it's there. Okay, it is confirmed. Secondly, on Monday, S&P 500 is not going to give any movement. Rather, it's all about holding the ground. It's not about the movement. It's about holding the ground. And you can see that on Monday, it just tried to hold, nothing else. So I will give you these the support and resistance levels for the next week. Now guys, then comes the fifth point of the agenda, that is the S&P 500 technical analysis on the daily chart. Okay, see, this was the weekly chart. Weekly chart means the hawk eye view, the big picture for a month, 4 weeks, 3 weeks, 2 months, 3 months. Okay, the long term picture. The daily chart means like for a week, for 2 weeks, okay, that's it. Maybe like 3 weeks, okay, that's it. Means a short-term picture. What is happening in the short term? Okay, we will discuss the change in the technical this week. Okay, after 1 month, now the technicals have changed from bullish to bearish. Particularly, it is the MACD and the stochastic RSI that have changed, okay, this week. So now I will tell you that because of the MACD and the stochastic RSI, okay, both of these are aligned bearish, that why we are anticipating a further bearish movement. Okay, and what will be the condition that the S&P 500 can move up, etc. So we will talk about the technicals. Okay, all of the technicals, that now what is the picture. But definitely, okay, now it is not bullish. No short-term bullish. Okay, that is done. Now guys, then comes the finally the sixth point of the agenda of this S&P 500 technical analysis, and the sixth point is the probable movement of the S&P 500 from February 13th, which is Monday, to February 17th, which is Friday. Okay, so I will tell you that what we are expecting, why we are expecting a bearish movement, or why we are expecting a hold on Monday. What will happen on Tuesday? On Tuesday, okay, it will be the February 14th. February 14th is the day when the CPI data will be released, when the CPI data will be published. CPI means inflation. And now what is expected to happen to the inflation? How the inflation is going to cause a problem? okay, or it can give a little relief to the entire stock market. So we will talk about this, the inflation, okay, and based on the inflation, the movement of the S&P 500 from Tuesday, but Monday we know what is going to happen. So guys, this is the agenda of S&P 500 technical analysis, and we have already discussed the first point of the agenda, tip of the week, okay, that is about the CNBC, the delay in the broadcast, okay. Again, I'm not saying that it is manipulated, and I leave it to your judgment, okay, what you think about this, but definitely, okay, you will always observe there is a delay of 40 to 60 seconds, okay, and information is the key to trade in the stock market, right? And this is the same thing, the information, okay, so I'm giving this the information to my YouTube community members on the daily basis, Monday through Friday, each and everything, and they are very well aware of each and everything, okay. Even before the open of the stock market, they know that what is going to happen, what is happening, what will happen, etc., everything. So they have this the information, and accordingly they trade. Now guys, before I proceed further, let me clear this thing that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. This S&P 500 technical analysis is not about the trade setups. Following my S&P 500 technical analysis, whether you are making 100% profits within a day or you are seeing 20-30% losses within a day, these profits and losses are all yours, because I do not know how you are going to interpret my S&P 500 technical analysis. Although I try my level best to give you the more precise or the most precise information and to clear each and everything, but still I do not know that how an individual is going to interpret my S&P 500 technical analysis. And guys, there is one more thing, that this S&P 500 technical analysis, it will be a bit lengthy, which is why I have made these the sections in the S&P 500 technical analysis. So there are multiple sections. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip. Or whichever section you want to rewatch, you can rewatch. So as per your convenience, okay. However, I will advise you to watch this the entire S&P 500 technical analysis, because all of these sections are interrelated. These sections and this S&P 500, the entire S&P 500 technical analysis, it contains a tons of information which you are not going to find anywhere. If you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And if you want to get these the daily analysis, the daily updates of the S&P 500 from Monday through Friday, then you can join my YouTube community. And in order to join my YouTube community, you can click on this the join button that is there just below the title of this video. So guys, now we have already discussed the first point of the agenda, that is tip of the week. Now we are going to discuss the second point of the agenda, which is the S&P 500 technical analysis on the weekly chart. Now guys, we are here, and this is the second point of the agenda of this S&P 500 technical analysis. So let me write it down. Okay, and secondly, this is the weekly chart. Let me write it down, weekly chart, W as in weekly. Okay. So this is the second point of the agenda, is the S&P 500 technical analysis on the weekly chart. Okay, this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 hour, 1 day or 1 minute. One candle means 1 week. Okay. Now, first comes the candle itself. If you look into the candle, it's a bearish candle. Okay, there is no defined shape, but it's just a bearish. So it's just a bearish candle. Okay, means there are bearish sentiments. Because there is no defined shape, okay, so we cannot comment that whether there will be a reversal, okay, or okay, this or you know, some other thing. Now, what you are going to notice here is that this was the boundary of the Ichimoku. This was the boundary of the Ichimoku, and it was at 4078. That was the reason I mentioned this thing to my YouTube community members before the close, okay, on that particular day on Friday, that if the S&P 500 closes below 4078, this means now 99% it is bearish. It is the resumption of the long-term bearish trend. That's it. Okay. But surprisingly, again, because we always trust the closing, and there is a manipulation technique, okay, which we call as marking the close. Marking the close means the market movers, they willingly close the stock market, okay, on some levels, or you know, stock prices or these indices, okay, on some levels, okay, because they understand that if they close the stock market or an index, okay, at a particular price or below a particular price or above a particular price, then many, or you know, hundreds or you know, thousands of these are technical traders, then they will see it as a potential buying or selling opportunity, and will come, with hundreds of millions of dollars, okay, all at once. And this the marking of this the marking the close. It's a well-known manipulation technique, okay. And this is what we have again seen here, that they have willingly closed it above 4078, okay. Anyways, this was about the candle. Now let's talk about the technical indicators. So first comes the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band of the Bollinger Band and median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Band, right? Then comes the next technical indicator, which is the Ichimoku cloud itself. Okay, because the S&P 500 is trading inside the Ichimoku cloud, this means that through the Ichimoku cloud, it is still neutral, and also it is still in the long-term bear trend. No change in the long-term bear trend. Okay, and this is what I mentioned again and again, right? So until and unless there comes two consecutive closings above the cloud, okay, there is no change. There will be no change in the long-term bear trend. Simple. Now comes the moving averages, because last week there was a crossover in the moving averages, okay. So this crossover means the bullish crossover. This has happened after what? After 1 year. Yes, almost after 1 year, okay. So this was the crossover in the moving averages. So as of now, okay, we know that S&P 500 is in the long-term bearish trend, but because of the crossover, okay, we have mentioned, okay, I have mentioned this thing, that the S&P 500 is in the short-term bullish trend, long-term bear trend, and the short-term bullish trend. Short-term bullish trend in order to form a lower high and then a downward movement. That's it, right? Anyways, so as of now, the moving averages, crossover in the moving averages, bullish. Secondly, S&P 500 has closed above all of the moving averages. This means that through the moving averages, means EMA, exponential moving averages, okay, S&P 500 is bullish, right? Now let's talk about some of the technical indicators. So now we have the MACD. MACD is positive, signal is negative. MACD is more than the signal. This means that the MACD is directionally bullish. It is not absolute bullish, it is just directionally bullish. That's it. Then comes the stochastic RSI. Because of the formation of the bear candle, the S&P 500, it has saved itself, okay, else the K channel would have become like 100, okay. 100 means the reversal. So as of now, the K channel is more than the D channel. K is more than the D, okay, indicating that through the stochastic RSI, S&P 500 is bullish. Through the MACD, it is bullish. S&P 500 through the stochastic RSI also, S&P 500 is bullish, okay. Then comes the divergence indicator. Divergence is normal. Divergence in the closing prices of the candles, it is normal, not a problem, okay. Then comes the then comes the saturation. No, as of now, it is not at the critical saturation. That's okay. Volatility is fine, not a problem. Directional momentum supporting the bullish trend, okay. And this is it, okay. So guys, now what we have seen is that the S&P 500 is bullish. It is bullish through the Bollinger Bands. S&P 500 is neutral through the Ichimoku cloud. S&P 500 is bullish through the moving averages, means EMA, exponential moving average, okay. S&P 500 is bullish through the MACD. S&P 500 is bullish through the stochastic RSI. There is a directional bullish momentum, okay, and not yet saturated. So what we are going to say, that as of now on the weekly chart, S&P 500 is bullish, and it is 90% bullish, okay. Now the S&P 500 on the weekly chart is 90% bullish, but this bullishness is for the short term only. S&P 500 on the weekly chart is in the short term bullish trend. I repeat, the short term bullish trend. That's it. It's not in the long term bullish trend. In the long term, it is still in the bearish trend, because it is trading below the Ichimoku cloud, right? And so this is very, very simple, okay. No rocket science, right? So this is the big picture. The big picture says that still S&P 500 is in the short-term bull trend. This means that if there comes any reversal for any known or unknown reason, in that case, you can plan your bearish trades and you can short, and then it will fall and you can make money. Okay, short selling, or you can buy the put options. Okay. Now, guys, there is one more thing. Okay, on February 14th, there will be this the CPI data. Okay, CPI data will be published on February 14th. CPI means the inflation. If there comes any indication that the inflation is holding, or if there comes a bullish reversal. Okay, in my previous S&P 500 technical analysis, I guess 1 or 2 weeks ago, okay, I have shown you technically that the inflation has hit the bottom, technical bottom, and now technically it is expected to see a reversal either this month, in the month of February, or in the month of March, but there will be a technical reversal. If the reversal, okay, if there comes no reversal in the month of February, in that case, in the month of March, there will be 10% or more than 10% bullish reversal in the inflation. Okay, if there comes a reversal in the month of February, then it will be around 5 to 10% bullish reversal. Okay, so I've discussed this thing, okay, in very detail there. Okay, anyways, so this is the weekly chart. So guys, once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily updates, the daily analysis of the S&P 500, means the critical information about the S&P 500. And if you want to trade safely in the S&P 500 in the stock market, then you can join my YouTube community. And in order to join my YouTube community, you can simply click on the join button that is there just below the title of this video, join button. So guys, now we have discussed the second point of the agenda of this S&P 500 technical analysis. Now let's discuss the third point of the agenda of this S&P 500 technical analysis, and the third point is the recent comments of the Federal Reserve Chairman. And let's see that what he has said, what has changed. Okay, the tone, the numbers, the picture, the forecast, okay, etc. And why after that the comments of the Fed Chairman, S&P 500 and the entire stock market came down. Okay. So let's move on to the third point of the agenda of this S&P 500 technical analysis, which is the recent comments of the Federal Reserve Chairman. So guys, now we are here, and this is the third point of the agenda, that is the recent comments of the Federal Reserve Chairman. Okay, now let's see that what has changed just within a week, not within a week, but 5 days, I guess, 5 to 6 days. That's it. 5 days, I guess, 5 days. Within 5 days, why his tone has changed from positive to negative only within 5 days. Okay, so guys, if you have noticed that last Friday, okay, this Friday, or that was Thursday, okay, non-farm payroll data, okay, non-farm payroll data, okay, it was published, and it was three times of the expected number. Okay, so earlier it was something, okay, 180,000 or something, and the Wall Street has expected like 200,000 something. Okay, and the real number, okay, that was published for this the non-farm payroll, okay, it was more than 550,000. Okay, so what it means? This means that now the unemployment rate is at the lowest level, not low, but lowest one, okay, that we have not seen in last 40, 50 or 60 years. Okay, now see, this is a good news as such, okay, because now people are getting the jobs. Okay, the non-farm payroll data says that now companies are, okay, means still there are more jobs available, and as compared to the job seekers. Okay, so there is a huge gap, okay, in the jobs available and the job seekers. Okay, and that is the problem for the stock market, for the Federal Reserve, for the entire economy. This is not good. Why it is not good? Because this the same situation is going to push the inflation higher. Okay, this is the primary cause for the inflation. Why? Now, because people are getting the money. Okay, see, it's all about that people are getting the money. People have the money. It's all about the money. People have the money, means they have the money to spend. What they are going to do with the money? They are going to spend the money. Spend the money on what? Spend the money on the essential items. Okay, food, clothing, okay, and whatever, okay, they want to spend, okay, but on the essential item. And that is the problem, because the producers of the essential items, they are not going to bring down the price, because there is no need. There is absolutely no need. Even if the producer further increase the price, then also people will buy there's a packet of bread. Okay, this is just an example. This means that the people, okay, they have the money and they can spend the money, they can pay more. I repeat, they can pay more for the essential item, and this in turn is going to create, or this is actually creating a problem, inflation. This is going to push the inflation further higher. Okay, so this is going to push the inflation higher, and we are seeing something like back in 1977 to 1981, the same kind of situation. Okay, the same situation. Inflation was at the peak, and the government intervened, federal reserve intervened. They have stopped the supply of the money in the market. Then they pushed the entire economy into the recession, and then only the inflation came down. Okay, now the Federal Reserve Chairman. So this was my first update to my YouTube community members. Okay, so this was there that he said that if the upcoming data comes stronger than expected, then definitely Feds will further raise the rates more than 25 bps to 50 bps also. And secondly, he said that he and no one had expected this kind of 3 times much better than expected. This is the non-farm payroll data stating that the labor market is strong. Okay, so whatever I have discussed here, this is all about the labor market, right? So this was the thing. See, recently we have noticed that in the month of February, okay, last week, Feds have raised the interest rates by 25 bps. Okay, so they have raised by 75 bps, then they brought it down to 50 bps, and now 25 bps. But now after this, the 25 bps, then there came this the 3 times, okay, 3x NFP data, okay, non-farm payroll data. So now he said that if there comes okay, any data which is stronger than expected, then yes, once again, okay, 50 bps, it is in the picture, or it will be in the picture, or if needed, then they can go more aggressive. Now, so I have mentioned this thing, okay, in this update, okay, to my YouTube community members, and I told them that today, okay, he's not that positive as he was last week. Okay, within 5 days, okay, there is a change from positive to negative. Then the third point was there is definitely some behavioral change, and looks like he did not like that much better than expected NFP data. Although he's trying to present himself, okay, as if nothing has happened, but his tone is not supporting him, right? Then the fourth point was he said that the inflation has started to come down, it has started to cool down, okay, and he's quite certain about that. But if there comes better than expected data, okay, in terms of like any data like non-farm payroll data, okay, on the inflation data, okay, then Feds will be forced to raise the rates, okay, because better than expected data means high inflation. Okay, this was the first point. So we knew, okay, that this was the picture. Now now this was the second update. Okay, now it was confirmed that his tone has changed. Okay, and at the same time, surprisingly, we have seen that the S&P 500 it moved up. Okay, and the Dow Jones and the Nasdaq, okay, all of these indices, okay, have moved up, right? So this was surprise. So see, the reason why the entire stock market has moved up, this was nothing but a bullish trap, nothing else, right? So now the second point was to my YouTube community members that today he said that definitely if the strong labor market report okay, again comes into the picture, and also if the inflation goes up, then Feds will raise the interest rates more aggressively from 25. Aggressive means from 25 to 50 bps, okay, or maybe like in an exceptional case to 75 bps to cool down the inflation. Okay. Now, last week, they pushed the stock market bullish based on the positive tone. Okay, who pushed the stock market bullish? The market manipulators, the market movers. Okay, based on the positive tone. And because today means on that day, the Federal Reserve chairman, okay, he was speaking there, okay, in the economic club of Washington. So now because today that the tone is changed, it's gone, okay, from positive to negative. This means that no other data is going to support any heavy bullish market. Means we are done. Bullish market is gone. Okay. Now we are at the junction where market has no or limited reasons to go further bullish. And if it want to, then it can only and only because of the technicals which are supporting the short-term bullish trend. Okay. Means short-term bullish trend to what? Short-term bullish trend to 4,160 or at most to 4,185. That's it. Not beyond that. Beyond that, the picture is closed. We are done. Okay. Now the strong resistance and resistance zones will decide the fate of the stock market, means the S&P 500. And yes, it is highly likely that this 4,100 and 4,160 can be seen as the lower high. And if you look into the picture, okay, this was the lower high. This is the lower high, right? So guys, this was the critical information that I have passed to my YouTube community members. Now there is one more thing, okay, that is there. So this thing was in my final update on that day. That yeah, now it's clear that Feds are not going to support the long-term bull market, right? But yes, through the technicals or through XYZ reasons, market can move into a short-term bullish trend or into consolidation. Now, short-term bullish trend means up to 4,160 or at most 4,185, but not beyond that. Beyond that, the picture is closed. Okay, it's just over, right? So the other thing is that the entire stock market can move into the consolidation if it doesn't want to give up. See, there is no upward, so there is no upward direction. Upward, okay, means the bullish, we are done, bullish. Okay, so now either it will move into consolidation, just up down oscillate between 2 points, or it will go bearish. That's it. Now these are the only two directions. That's it, nothing else. Now, then the another this the important okay part was that now 4185 is going to act as the final resistance for the stock market for the S&P 500 at least until February 14. Okay, because before February 14 there is no news, no good news that can help the entire stock market to go bullish or to move up. Means as of now S&P 500 is not expected and will not be able to breach 4185. That's it, we are done. Okay, and it's not just the 4185, but it's also the 4160. Okay, any movement beyond 410 is not possible. Okay, then there comes, if the stock market fails, means if the S&P 500 fails to clear the 4100 to 4160 zone in 2-3 days, then also it can be considered or accepted as a lower high. Okay, that I have already mentioned. Then from that day onwards, from that okay, what was that? That was Tuesday, I guess. Yes, Tuesday. So I mentioned that from Tuesday onwards, at least until February 14th, do not trust any upward movement as such and be aware of the bullish traps, because any upward movement is going to act as a bullish trap. As simple as that. So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And also, if you want to get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything. In that case, you can join my YouTube community. And in order to join my YouTube community, you can click on the join button that is there just below the title of this video, join button. Now guys, let's move on to the fourth point of the agenda and of this S&P 500 technical analysis. And the fourth point of the agenda is the S&P 500 support and resistance levels. So let's see that for the coming week, okay, where the S&P 500 is expected to move. Okay, means okay, what will be the levels? What will be the extremely strong resistance levels? What will be the extremely strong support levels? And what levels we can trust or what levels we can anticipate, okay, for this the coming week. So that will be there in this the fourth point of the agenda, which is the S&P 500 support and resistance levels. So let's move on to that part, the fourth part of this the agenda. Now guys, we are going to discuss the fourth point of the agenda, and this the fourth point of the agenda of this S&P 500 technical analysis is the support and resistance levels for the S&P 500, right? Now, if you notice that last week S&P 500 was able to close just above the moving average. Okay, so this means that as of now, the immediate resistance that the S&P 500 is going to face is the 4,100 to 4,110. Okay, see. This the 4100 to 4110. It was earlier acting as a very strong support for the S&P 500, right? But now because the S&P 500 has closed and has come down below this and has breached this the zone of 4100 to 4110. This means now the strong support is going to act as a resistance or a strong resistance for the S&P 500, right? So this is going to act as the very immediate resistance for the S&P 500, 4100 to 4110. Okay. Thereafter, we have 4,100 to 4,160. The next, this is the resistance zone, the very heavy resistance zone, 4150 to 4160. Okay. So as of now, once again, now if the S&P 500 is able to breach and if it is able to move up, okay, above this the 4100 or 4110, in that case, this is the same. Okay, this particular zone 4100 to 4110 will act as a support. Okay, then it will act as a support. Now again, the movement between these two zones, okay, this is where we are anticipating this the new lower high to be formed. Okay, as of now we have seen that back to back, okay, then it came down, right? This is where we are anticipating the lower high to be formed. Okay, this means that any retrace as of now can be seen as an opportunity to go bearish, right? Anyways, there is a catch, and the catch is that February 14th. February 14th is Tuesday. Okay, Tuesday at 8:30 a.m. Eastern Time, US and Canada. Okay, 8:30 a.m. The CPI data, the inflation data, okay, it will be published. Now that CPI data will then decide the fate of the S&P 500 and the fate of the entire stock market, whether there is any potential to move up or if it is going down. Because if the CPI data says that now the inflation is holding or has started to move up again, in that case, definitely, because the S&P 500 and the entire stock market is already bearish, this means that there will be heavy selling, very heavy selling in the entire stock market. Now, if the data says that inflation has cooled down further, okay, a little bit, in that case, the S&P 500 can try to move up, but this the upward movement will not be that heavy. Okay, means the upward movement at first, okay, it will be the S&P 500 will try to move up to 4,150 to 4160. Okay, and if it fails to breach this particular zone, in that case, okay, this simply means that S&P 500 try to move up, but even with this, the inflation data, okay, that is now supporting the entire stock market, S&P 500 is not moving up. This means that no. So any further movement, okay, is not possible. Now there will be, one more thing again. 4185 will come into the picture, the resistance. So if there comes any breach, intraday breach, okay, or any other breach, okay, in that case we can say that the upward movement is now limited to 4185. As of now, even with the supporting inflation data, okay. See, the only case the S&P 500 can resume its short-term bullish trend and can breach 4160 and 4185 will be if the inflation comes like 10% down, okay, from the previous number. Okay, so means inflation must be convincing. Okay, the number it must be convincing, and the number must say that now the inflation is coming down, okay, at a heavy rate or at a very heavy rate. This means now the Feds, even though the non-farm payroll data, it was much better than expected, but now the downward movement in the inflation, this means that Feds may not go as aggressive, okay, as they want to, and now still Feds can consider this as fact. Okay, so that will be the only reason S&P 500 can breach, okay, this particular strong, okay, resistance 4160 or 4185. Okay, then we have 4227. Okay, so next week up to 4227, okay, that will be enough, because from this point to the 4227 it will be like 3.5%, okay, with some ups and downs. So see, it is subjective. It depends that what is the real number of the inflation. So if you are my YouTube community member, okay, then in the pre-market update on Tuesday, I will tell you that, see, this is the number and this is the potential impact, okay, that whether the S&P 500 will be able to breach or whether it will not be able to breach, okay, whether it will be a trap or not, and whether you can go bearish or is the time to go bullish, etc. So on pre-market update on Tuesday, okay, if you are my YouTube community member, I will give you, okay, this update and okay, and this all of this the scenario, right? Anyways, so upward movement. Now the downward movement, okay, if you see, then we have seen that 4065, it has worked, okay, it has worked as a very strong support, very good support, okay, as I mentioned in my update. And this was the same thing that I mentioned in my pre-market update on Friday, that in short we can say that on Friday, today means on Friday, any upward movement will be limited to 4090 or to 4110. That's it. Okay, not beyond that. And any downward movement will be limited to 4065. Okay. And if you notice here, this candle, okay, low of this candle was 4061 and the high of the candle was 4094. Okay, and this was as was expected through this the pre-market update. So pre-market update, okay, I give this the pre-market update before the open of the stock market, so that my YouTube community members, okay, they should be very well aware of what they are going to see, what kind of movement they are going to see, what is expected to happen, what is going to happen in the entire stock market on that particular day, right? So this was there. Anyways, so this means that again 4065 is going to act as a good support, okay? And then comes the 4035. 4035 is actually, okay, it's a zone. It's a zone, 4035, okay? So any downward movement, it will be supported by the zone of 4035, and the S&P 500, if there comes selling, okay, or downward movement, then S&P 500 will be able to hold around 40 or in the zone of 4035, okay, for some time, maybe like 4 hours, maybe a day, maybe 2 days or so, okay. Thereafter we have the 3991, again a very strong support, okay. Thereafter we have 3960, 3937, yes, 3937 is again a zone. Then we have 3910 and 3900. Now any downward movement, or even if there comes very heavy selling, then also S&P 500 will find very good support, very heavy support here, okay. Yeah, because this is the boundary of the Chimoku as well as calculated support level as well as the previous consolidation zone, okay. So multiple factors are here. So even very heavy selling will be supported by, okay, means S&P 500 will find support here, okay. Then we have 3884, or intraday if there comes any breach, then up to 3884, that's it, okay. This is like 5% downward movement or so, okay. So as I mentioned earlier, okay, if there comes a bearish movement, it will be heavy. If there comes a bullish movement, it will be light, it will be normal, okay. This is what we are going to discuss in the sixth point of the agenda of this S&P 500 technical analysis, and that the sixth point is the probable movement of the SP 500, okay. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get these daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, then you can click on this, the join button that is there just below the title of this video, join button, okay. Now guys, let's move on to the fifth point of the agenda. And the fifth point of the agenda is the S&P 500 technical analysis on the daily chart. Remember, we have discussed the S&P 500 technical analysis on the weekly chart. Okay, now we are going to discuss, so weekly chart means the big picture. Now we are going to discuss the S&P 500 technical analysis on the daily chart. Let's see like what is going to happen in this the short term, okay, about this the downward movement, about, okay, this the upward movement, like what technicals are saying, and the change in the technicals, MACD and the stochastic RSI. So guys, before I proceed further, I have this very important information to share with you, that if you want to join my YouTube community, and you need to click on this the join button that is there. Once you click on this the join button, then this pop-up will open. Now in this pop-up you will notice that we have, okay, this all midweek updates. So what is this, the all midweek updates? All midweek updates means you will get the daily analysis, the daily updates of the S&P 500 from Monday through Friday. And guys, you can see that most of the people, they have joined my YouTube community for last many months, and they are getting the daily analysis, the daily updates of the S&P 500 from Monday through Friday, each and everything for last many months. And guys, there is one more thing, that once you have joined my YouTube community, then you need to visit my channel and you need to click on this the community page, and you will find each and everything, all of the updates, okay, here in this the community page itself. And if you are using the YouTube app, then you will get these the updates, okay, through the YouTube app. So guys, once again, whenever you want to join my YouTube community, you can click on the join button and you are welcome. Now guys, we are going to discuss the fifth point of the agenda of this S&P 500 technical analysis. And the fifth point of the agenda is the S&P 500 technical analysis on the daily chart. Okay, so see, this is the daily chart. Okay, DS in daily chart. Daily chart means that one candle represents 1 day, not 1 hour or 1 week. One candle means 1 day. So guys, first comes the candle. If you look into the candle, it's a bullish candle. Definitely, it's a bullish candle. Okay, no defined shape, but it's a bullish candle. the only problem with this, the bullish candle, that it's a small bullish candle. It's not a heavy bullish candle like this, okay, like heavy bearish candle, or like this heavy bullish candle, or like this, heavy bullish candle. Okay, that's the only problem with this, the bullish candle. This means that there are still some bullish sentiments. Okay, and what kind of bullish sentiments? These the kind of bullish sentiments, they are simply trying to keep the S&P 500 hold, or they just want, or they are just trying, or they are simply helping the S&P 500 to hold, okay, rather than coming down. But these bullish sentiments are not saying that the S&P 500 is going to move up or to breach, okay, and it will be in the long term bullish. No, nothing like that. These are simply giving some kind of this a very little support to the S&P 500 to hold rather than to come down, okay, heavily. They are just trying to they are just giving this support, okay, to hold, nothing else, right? Now comes the technical analysis. If you look at the technicals, first comes the Bollinger Bands. This is the upper band of the Bollinger Band, and this is the median of the Bollinger Band. Because the S&P 500 is still trading in between the upper band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands on the daily chart. Then comes the moving averages. Moving averages means EMA, okay, exponential moving averages. So if you look at the moving averages, there is a clear fan out. There is a clear fan out in the moving averages. Secondly, now surprisingly, the S&P 500 has closed just above this, the moving average. Okay, it has saved itself. Okay, this means that still through the moving averages, still through the EMA, exponential moving average, S&P 500 is bullish. It is still bullish and holding. Okay, then comes the Ichimoku cloud. Because the S&P 500 is trading above the Ichimoku cloud, this means that the S&P 500 is bullish through the Ichimoku cloud. Okay, now this thing is clear. Now let's see what other technical indicators are saying, and this is where the picture is going to change. After 1 month, as MACD, okay, MACD has changed from bullish to bearish, because now the MACD is less than the signal. This means that now the MACD is bearish. It is directionally bearish. Clear. Then comes the stochastic RSI. The stochastic RSI K channel is less than the D channel. This means that the S&P 500 is bearish through the stochastic RSI. Okay, yep, let me mention here that the S&P 500 is bearish through MACD. Sorry, the S&P 500 is bearish through MACD, and the S&P 500 is bearish through the stochastic RSI. Okay, then comes the divergence. Divergence is not a problem, it is normal. Then comes the saturation, no saturation at all. Volatility is normal. Directional momentum is bullish. Directional momentum is bullish. Okay, so now this is the picture. So now we can see that last week all of the technical indicators were bullish. This week MACD and the stochastic RSI, two of the primary technical indicators, are bearish. Okay, and if you have subscribed to my channel for last many months, okay, then probably, okay, you might have noticed this thing that I mentioned, this thing, this particular concept again and again, that whatever is the direction of the MACD and the stochastic RSI means combined. Okay, this means if the MACD and the stochastic RSI follows a particular direction, then that direction becomes a direction of that particular stock, index, commodity, or whatever you are trading into. Okay, and this is what we have seen, okay, most of the times, okay, like 95% of the time, this is what we have seen. Okay, and this is how it works. And now MACD and the stochastic RSI both are bearish, both are aligned bearish. Okay, this means that now any upward movement, technically any upward movement, okay, even if there comes any upward movement, it will be limited. It will not be that heavy. It will not be that heavy, and that was the reason, okay, I mentioned in the fourth point of the agenda, okay, that was support and resistance levels, that any upward movement, it will not be heavy. But if there comes a bearish movement, there will be very heavy selling, okay. So, well, we are going to discuss this part in the next point of the agenda, that is the probable movement of the S&P 500. Okay, but as of now, this is the picture. This means that now the S&P 500 is neutral. Technically, it is neutral. We will not call it as bullish, because MACD and stochastic RSI both are aligned bearish. Okay. Now, on the daily chart of this S&P 500, we will simply say that Now the S&P 500 is neutral. Technically it is neutral on the daily chart. Okay, now it will wait for the direction either this way, okay, or this way. This way, okay, a little or normal direction. This is very heavy. Okay, so this was the technical thing. Now there is one more thing, okay, that I want to mention here, which is this: the stochastic RSI. Stochastic RSI, okay, looks like that it is going to hit the zero, absolute zero. Okay, so we are going to talk about this thing, okay, in the next part. But before that, guys, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to get the daily analysis, the daily updates of the S&P 500, then you can join my YouTube community, and you can use the join button that is there, just below the title of this video. Now, guys, let's move on to the sixth and the last point of the agenda of this S&P 500 technical analysis. And this point, and this is the probable movement of the S&P 500 for the week of February 13th, that is from February 13th Monday to February 17th Friday. Guys, now we are here, and this is the sixth and the last point of the agenda, that is the probable movement of the S&P 500 from February 13th, that is Monday, to February 17th, that is Friday. Okay, let's see how the S&P 500 is going to behave or is going to move, okay, from Monday through Friday. So guys, the very first thing, okay, here that you are going to notice is that S&P 500, okay, it was able to save itself by closing just above the moving average. Okay, this means that for now the intention of the S&P 500, the intention of the stock market is to hold. Okay, this is the intention of the stock market, to hold. Okay, it's not about the movement, this movement, that movement. It's just about, okay, this the hold. Okay, what this means or what it means? This simply means that as of now we can expect that on Monday, particularly on Monday, okay, you can expect, some ups and downs, okay, a little candle, okay, where we will see that the S&P 500 is trying to hold. On this, the February 14th at 8:30 a.m. Eastern time in the morning, CPI data, the inflation data will be out. Okay, now that inflation data, okay, now that inflation data will then drive the entire stock market, either bullish or either, okay, or this bearish. Okay, that is the reason that on Monday the entire stock market will be in the wait and the watch mode. Simple. Okay, now other than that, see, most of the time these market movers, okay, they have some insider information. Okay, so if they have any kind of insider information, then they can move the stock market, entire stock market. Okay, means this the S&P 500 and the Dow Jones and the Nasdaq. Okay, so if there comes a movement like the bullish movement, okay, or a bearish movement on Monday itself, then that does not mean that they are giving an opposite direction. Okay, a movement in the opposite direction. It might be that if they are giving a bullish movement, this means that they know that the inflation will come down. This means that on Tuesday itself, okay, again you will see a, okay, or you might see, okay, a bullish candle. So you never know that means what exactly they are trying to do. Okay, whether this is the bullish movement, it is true, or okay, or it's a trap. Whether this is the bearish movement, it's a, okay, it's a true movement, okay, or it's a trap. Okay, but what we are saying or what we can anticipate is that on Monday, most likely, technically, and because of this the CPI data, the entire stock market must hold. Rather than giving any movement, it should try to hold. That's it. On Monday, okay, stock market must hold, must give that kind of movement, hold. That's it, nothing else. Okay, because the real movement come, okay, only on Tuesday. Now, so on Monday, it doesn't matter that what kind of candle, okay, the S&P 500 is going to form. Okay, a red candle, green candle, okay, a dozy, or a heavy bullish, okay, heavy bearish, doesn't matter, because eventually it will be the Tuesday that is going to drive the entire stock market. Okay, 8:30 a.m. CPI data will be out. Now it all depends that CPI data, okay, whether it is more than the previous one or whether it is less than the previous one. If it is more than the previous one, then how much? If it is less than the previous one, then how much? Okay, so if you are my YouTube community member, then based on this, the number, the percentage increase or percentage decrease, I will tell you that now what particular level, okay, we can expect here, okay, in the entire stock market, or how you can prepare yourself, okay, to bullish, like bearish, okay. it will be very similar to the same thing that I've told you, okay, on this the Wednesday, and all of you have made some good money, okay, that even that we are seeing that there is an open, okay, a good open. However, there will be a fall, either immediate or after some time there will be a fall. Although the open is there, okay, this does not guarantee, or this does not mean it is going to move up, rather it is going to fail, means it will simply not move up, rather it will come down. Okay, and this was the reason you knew this thing, and you have bought the put options, or you have okay, done some there's a short selling, and all of you have made money, okay, this day on all the, okay, this day. Anyway, so now on February 14th, Tuesday, okay, I will tell you whether, okay, based on this the CPI data, whether it is more or less, and accordingly you can prepare your trades, okay. So now on Tuesday, okay, there will be this the movement. So there are multiple, these are permutation combinations, okay, but let's keep it simple. Okay, if the CPI data comes again, if the CPI data shows, okay, some kind of decline, further decline in the inflation, then there will be, okay, there's the bullish trend, resumption of the bullish trend, okay, not the resumption. So it will be the resumption of the short term bullish trend, okay, resumption of the short term bullish trend. Short term bullish trend means to what? First 4150 to 4160, okay. So it has to breach this particular, this heavy resistance zone. Thereafter comes 4185. Okay, so it all depends the okay, this the number, exact number, okay, what it is, okay, based on that. So then comes the 4185. Okay, if the number is much better, okay, than expected, in that case 4185, okay, or but within a day we will see like 1 to 1.5%, okay, this is the movement, because whatever happens in the bull side, the movement is not expected to be heavy. Okay, the reason is that the Fed chairman himself has confirmed that no matter what, Feds are not going to give any kind of relief in the year 2023, okay, to the entire stock market. This means that we are in the second month of the year, February, 10 more months to go, there is no relief. This means that bullish as of now, okay, it is not logical. Yes, this is the data, okay, it can give some relief, okay, but even though, okay, there will be this the normal bullish movement, normal bullish trend, okay. Then after 4185, okay, again, it is not that easy to breach 4160 or 4185, okay, it has to struggle, okay, and most likely it can simply give up from here, okay, even though see, yes, there are some chances that, let's say that the CPI data is less than the previous one, means it is saying that the inflation has come down, and you will see that it is moving up, and then immediately there comes like a drop, heavy drop. That is also possible, okay, but that will depend on certain these the other factors, okay. So means again, there are multiple combination that I cannot discuss in this video, else it will be like a very lengthy video, okay. But yes, to my YouTube community members, okay, I will tell you, okay, this thing in writing, okay, on Wednesday before the open of the entire stock market, okay, based on the numbers that we will be having, okay. Now guys, any upward movement will be limited to 4160, then 4185, okay, most likely, okay, this will be it. Now within a day up to 4160, 4185, then thereafter, okay, if there are any chances, okay, or if the data supports, in that case, yes, an upward movement to at most 4227, then 4291, okay. But once again, no matter what, how good or bad the data is, no matter what about like any news, and it doesn't matter, 4291 is the final resting place for the this the SP 500 for the entire stock market, okay. It can move up to at most 4291, that's it, it's done. Even in the best to best case scenario, that's it, nothing else. Beyond 4291 there is nothing, it's not possible, okay. On see, even the 4291 is not possible. This is the same thing that I mentioned here, okay, in the last week, that even 4291 is not possible. And forget about 4291, even 4227 is not possible, okay. The reason is that the Feds have cleared this thing again and again, that there will be no relief in any form, rather there will be back-to-back rate hikes. Back-to-back rate hikes means that the economy is going to further slow down, okay. So it will be simply contradictory that the stock market is moving up, economy is slowing down, because there is no fuel means money, there is no money, right? So again, this is very subjective, okay. This is the upward movement. Now but now we know that 4160 very strong resistance, 4150, 4160 very strong resistance, then 4185, then we have 4227, Okay, but this is rare. Okay, very rare. Beyond 4185, it is very rare. Okay, now because 4227 is rare, this means that 42991, okay, is extremely rare. Okay, for this to happen, there must be some some convincing data, much better than expected data. Okay, or the comments, okay, of the Fed chairman himself. Okay, or like some kind of news just out of the blue. Okay, means some exceptional news. Okay, anyways, now if the CPI data comes like moderate, normal, okay, and it says that now the inflation, or if it says that if the inflation is holding, or if the inflation is moving up, or if the inflation is regaining its bullish trend. See, we have okay, these three scenarios. Number one, that the inflation is coming down. Number two, that the inflation is holding. Number three, that the inflation is moving up, or inflation has regained its bullish trend. Okay. Number one, only the number one scenario can help the entire stock market to move up. That's it. Number two scenario, number three scenario, okay, these are bad for the entire stock market. Number two scenario, hold, or the resumption of this the bullish trend in the inflation. This simply means that the entire market is going bearish. Okay, and now there is no more or not any more bullish or the long-term bullish movement, at least for next few weeks, okay, or a few months, okay, or so. So now comes, okay, hold. If it says that the inflation is holding, then we will see that the stock market is coming down, entire stock market is coming down, or for a day or two it can try to hold, okay, and then it come down. Okay, but if it says that the inflation has resumed its short-term bullish trend, then back-to-back heavy candles, 1, 2, 3, 4, and so. Okay, heavy candle, and within a week we can see 5 to 10% decline. Okay, this in the S&P 500 and in the entire stock market, 5 to 10%. Okay, 10, yeah, approximately 10 to 10%, 10, 11%. So that will be okay. Historically, we have seen that within a week, S&P 500 has given up to 10 to 12%. So we can comfortably say that 5 to 10% decline. Okay. Now comes these the important these the numbers here. Okay, these the levels, important levels. Okay. So what we know is that any downward movement, okay, it will be supported by the zone of 4035. So S&P 500 is expected to hold around this the 4035. However, in this case, in the third case, okay, resumption in the bullish trend for the inflation, S&P 500, okay, might not respect the 4035, and you will see that there is a heavy candle. Within one candle, it has breached the 4035. However, mid of the day, you will see that like for 2 hours or 4 hours, okay, it tried to hold in or above the zone of 4035, but it has then finally, okay, it gave up. It has breached this the zone of okay, it has breached the zone of 4035. Because it has breached, okay, in single candle, in one candle, this means that now there is no more bullish or nothing bullish. Rather, there will be a gap down open, okay, or immediately upon open further fall, then a gap down, then fall. Okay, back to back heavy red candles. Okay, so 4035, if we see that the SP 500 is able to hold above 4035, then that's a point of relief for the bulls, at least. Okay, means for the bulls, that now because it is holding above 4035 means it can still resume, or it can still give some retrace, some bullish retrace, and then once it will see some bullish retrace, then it will come down. Okay, after this the bullish retrace. So as of now, what we can see is that for now any bullish retrace, okay, it is going to act as an opportunity to go bearish, not bullish, but to go bearish. Okay, but again, CPI, okay, this is conditional. CPI is conditional. CPI will define, or CPI will decide the fate of the entire stock market. Okay, so it all depends. This is the CPI. 4035, then we have beyond 4035, then we have no, as such, nothing. Rather, okay, we will see that it is coming down to this the Ichimoku cloud. Okay, means a kind of a virtual vacuum. Okay, here. Now in the bullish side, we will see that we have 4150 to 4160, and then we have 4185. Okay, so guys, once again, okay, it is all subjective, especially Tuesday onwards. It is all subjective, but Monday, yes, Monday we know that most likely it is going to hold. it will hold. Rather than giving any movement, it will hold, because on Tuesday there is an event. Okay, now, so once again, if you are my YouTube community member, okay, then you need not to worry about, okay, this, the data, or okay, whatever. Then, because I will give you a pre-market update and I will tell you, okay, what exactly is going to happen, okay, Tuesday and then the Tuesday onwards, right? So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community, then you can click on this, the join button that is there just below the title of this video. And guys, other than that, if you have liked this video, then hit like. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section, and I will try to answer your questions, right? So guys, this was my S&P 500 technical analysis for the week of February 13th, 2023. That is from February 13th, Monday, to February 17th, Friday.